Hi, everyone, and welcome to the TimingResearch.com Analyze Your Trade, episode number 161 for June 1st, 2021. We are recording this at 4 p.m. Eastern Time. My name is David Kosmeter. I'm the creator of TimingResearch.com, and you should be seeing Norman Hallett's screen right now. He's our guest for today, and the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Okay, great, David. And thanks everybody for being here. And we're going to get into a lot of information here today. The market opened up and then it kind of went into the fade mode after that. So we'll get an idea here from Norm Hallett, what he thinks is happening. Also, these commodities have been going nuts all year long, and Norm has extensive background in the commodity sector. We definitely are going to hit those as well as some of the stocks here on the list. But before we get started, we generally start out with some kind of an overview. Well, we'll start out with introducing Norm first, and then we'll get into the overview. So Norm, a quick background on yourself for the listeners.
Well, thanks everybody for joining us today. I always have a lot of fun with the option professor and David. We're good friends, but we also love to look at markets together. And you'll be kind of a fly on the wall here, which would be kind of fun. My background has been started in options years ago when there was no regulation. It's the Wild West, and I ran a very large option firm way back then, trained traders and learned a lot about trading from managing traders and seeing the kinds of trading plans that they had, what they were doing. And that's why the last 20 years of my 40-year career, I've focused on what I believe is the most important part of trading, and that's the mental and emotional part. Most traders don't want to hear it, but those that do, they're the ones that make up a vast majority of that 10% of traders that do well in the long term. So I'm a big believer in understanding how to take your losses. And we're going to talk about probably that through, I mentioned it once or twice, maybe with some of these stocks. But the idea is that if you learn to take your losses in stride, you can move on to the next trade that's going to win. If you battle with your losses, if you battle with negativity, and you battle with listening to talking heads, you're not going to get very far. You'll just be repeating the same year of experience 10 times. So when I ask somebody, just telling David, and when I ask somebody tells me they have 10 years of trading experience, they ask them is it 1 year experience 10 times? Because that's usually the case. If you don't reflect and take a look at who you are as a trader and where you're going, where you want to be, and make the corrections. That's why I'm big on journaling. That's why I'm big on the mental and emotional parts. And that's why I've created what I call simple trading plans, which make it very simple to understand when the heck to get out of the market so that you can get back in one that's actually working for you. So the quicker you can put the losses behind you, the more you can, the more opportunity you have to jump on something that will work. So that's kind of my background. That's a little bit more my philosophy than my background, but that's where I'm coming from.
Sure. And I love that journaling thing because it slows the pace down so your mind isn't jumping around as an unsettled mind. You settle down when you have to do a journal. And also it gives you accountability. So you're settling down your mind because you're journaling, and also you are giving concrete accountability. So you can't, in your own mind, dismiss things that aren't working or other type of rationalizations that will come back and haunt you as your bankroll is not being protected with discipline, right?
Well, that's a great framing of it because, as a trader, you must frame your work as a trader, as an entrepreneur. And entrepreneurs, the best entrepreneurs take a lot of time off, literally, in order to assess and kind of put out of their mind the intricacies of what they're doing and let the good ideas and corrections pop up. And that's really what the journaling does for traders. I've developed a way to, I only trade, I'm big on journaling, but I'm on type A. So that's a conflict. So I journal about 4 minutes a day. That's all I journal. And that's enough to get the job done. And, I like to talk about that in some of my presentations, but yeah, got to journal, self-reflection. I think, I know you're a proponent of it also.
Yeah. Type A, it almost requires journaling and you say it doesn't take you forever to slow your mind down, but that time you spent does bring you back to a center. And if you don't have a center and you're just going all crazy, changing your mind and changing your positions all the time, it's not going to end well.
Mm-hmm.
Yeah. All right. Well, let's go here. And here's what I was seeing here today. We opened up at 42.16 on the S&P. We made a run at the all-time high at 42.34. The all-time high was 42.38. It made a bit of an about face, went home on a negative number, 42.02. You know, I see there's guys like Tom Lee talking about a melt up. And then I hear that May was the lowest volume ever since 2001. So we got volume drying up, which means it doesn't look like anybody's too excited. And then we've got some quant guys saying that there's going to be this move up 4,400, 4,600 or whatever. Very confusing. What are you seeing here right now? Because it is, I'm sure there are other people who are wondering which way we're going to break.
Yeah, if you look at, I think I grabbed a very long-term chart. I don't have that ability. Let's see if I have it right here. I believe I do right here. Yeah, I mean, this is what the market has done in the last 20 years. And it's just been a drumbeat higher. And I think for long-term players, if you're a long-term player, I think you stay in, but I think you also have to, you got to withstand whatever corrections are going to come. But I've never seen a chart. You don't see charts like this kind of March, this kind of market. Of course, you had your huge corrections in here, but that was 2 years out of this 12 or 13 years. I just think that this market, the upward momentum is here to stay, but there will be corrections. I know that doesn't help many people. But in the short term, I'm looking more, I believe that we are ready for some corrective actions, just my opinion. And part of that opinion is based on the kinds of, if you listen to the news, it'll tell you that we had, 3 out of the last, or 4 out of the last 5 up days. But look at this. This really, we're not breaking any records, although we tried to test that, as you mentioned earlier in the day, the recent high in the S&P, and and yet we had a divergence in the middle of last month, which resulted in the downward relief that you would have expected from this divergence. And now we've been marching, but with 2 weeks of trading and really not a lot of distance compared to where this market's come from. We haven't reached new highs, and we're coming to a zone right here. And this is the first time I'm going to mention HEMA's work. Again, I think David put it in the chat. I left my admin at the Disciplined Trader. If you want a copy of her work, I'll love to mail it to you or show you how you can get it. It's free. Just write me there and say, show me HEMA's work, HIMA. But what you're looking at here is a band. This red band goes from 55 to 65. This is the RSI, okay? And this is your normal components. This is the stock parameters of the RSI, so you don't need to change anything. But this is a band that I've posted based on her work. And when a market plays within this band, and this is an area where a market tends to resist an upward movement. If it's a bearish market, and this is not a bearish market, it could be, but the fact that it's playing in here, if we start to turn lower, this red band is the bearish support area where if the market comes down, this momentum will swing down and tend to end that downward movement in this band, which is the 20 to 30 band. So this is the band the momentum tends to move when it's a bearish market between here. And when it's a bullish market, it tends to move between these two bands, 80 to 90 and 40 to 50. So I won't bore you with the numbers too much, except for to say that when we start playing a lot of, we've been in the middle here. And when you're in the middle, you go nowhere. And that's what's been happening here. Right. So I just think we're ready for some relief because we really haven't seen much. Now that relief may only last for the next couple of weeks, but I think
Yeah.
today's, look at the action all of last week. I mean,
Well, you also got a situation where we're in a lull meaning there are no earnings being reported. Most of the reports that are coming out are fairly anticipated. I'm sure they're going to totally correct that unemployment from last month and probably do a revision. And, you know, you would expect it to be a pretty good size report this week, unless everybody is waiting for the unemployment benefits to run out in September and nobody's going back to work all summer long. I mean, and then you're going to get lousy numbers all throughout the summer. So, you know, there are a lot of people hanging on to this report Friday, the jobs report, because it can either be monster if everybody went back to their service jobs, and B, it could be another spotty one if everyone's sitting out the game until the bonuses run out, which is in September, which means they've got the summer off. So, you know, I think people are kind of waiting around to see what's going to go on a little bit. These inflationary numbers are picking up too. That's got people a little nervous. But the truth of the matter is you're not above 175 on the 10-year, and you're not above 254 on the 30-year, which occurred in March. And despite all the inflationary numbers and these great numbers, you know, people are also recognizing you're comparing them against a shutdown economy, right? So, you know, it's kind of like your arms were at your side and you whacked away. So what about 4180, 4160? Is that a reasonable line in the sand? If it started to break, that could be the shot heard around the world, or what?
Well, you know, I mean, in the very short term, yeah. I mean, 4180, 4160, 4150 right in here. I mean, that's certainly a weekly analysis, but I mean, this market, we have seen some topping action, but you know, I mean, look here. This is where these green lines is where a bullish market tends to base, and you can see where the market kind of every time it hit this, but you know, and it happened here again. Yeah. But we have not, but we are failing to advance to have real strong bullish momentum. In fact, we're losing it here. So I think you know, I'd be careful to establish you know, strong long positions here. I mean, I've been looking at places to sell just for the very short term. But yeah, I would say that, you know, this is the 8-bar exponential moving average, which I follow. You know, I'd need to see that broken. I'm going to show you a number. Here's where a market hesitated in what it wanted to do on one side of the 8 and then broke through. When it does that, it tends to lead to movements higher. Sometimes they're very short-term movements, sometimes they last. Here's the last time it did it. And although we have advanced, we have not really seen what we've, you know, what you'd be expecting. This market's been, I mean, Friday literally is traded between 20 point, in a 20-point range in the S&P. Yes, it was before a holiday, but it was full trading hours. I just, I think we're losing some steam for all the reasons that you talk about. And, you know, I don't talk about the reasons so much because, which is why I really like to present with you, because you're a reports guy and you understand what's going on. We all have to be aware of it, but the idea is that in technical analysis, everything that's out there is in the market already reflected in the price. So
and that's the problem right now is that the market will make a move technically through the 42.38 or through the 41.80 or 41.60. And then there'll be a reason behind it. And you don't have to be a genius. It'll probably be something to do with the jobs report Friday, wherein if somebody has their mouth opening catching mosquitoes because they were thinking it was going to be one thing and it comes in the direct opposite. And all that lack of volume from May, maybe that'll turn into volume as we go into the next week or two. Yeah. Anyway, let's start hitting these stocks, and because we want to get over to the commodity sector as well. First off is SONO, SONO.
Hey, I got them all lined up, Jim. I was a good boy. I got them all lined up the way David lined them up for me. Yeah, there's SONO. I drew a line in there that now I want to you know, this is a line that needed to be broken. Down here, and it did that again. Again, we had a similar formation here. You can see again a formation where you have hesitation and then movement through. This is part of a trading plan, a simple trading plan that I've developed called Loaded Gun that I like to use on a lot of these stocks that really follow it. Here's another situation where you have hesitation followed by a more definitive bar leading to a movement higher. Here's, of course, a more dramatic one, where you know, these look like small bars, but at that time they were just the same size as they had been for weeks, you know, leading to sometimes again, it leads nowhere. Sometimes it rides that eight bar. So it doesn't always work. Don't go buying this every time you see it, but I like to look at it as an indicator. But again, look at this. You notice that when the market was going up, we were you can't see it back here, but we can, you're moving from the green. There was some mess here and the market was a little messy, but when we started, that momentum started to go higher, came down, but now we seem to be playing in here in this between the red, which means we may be in a bearish phase here. There may be a little upside, because really you'll be surprised how this gets honored, where we actually reach the band here. The fact that we've broken out means that we could go higher, but where are we going with this, Jim? I mean, we're at 38. This seems to be a pretty good ceiling. And from my estimation here, I don't know that I'd be loading on any long positions, but there's probably a $2 or $3 in here for a day trader.
Yeah, the 200-day moving average comes in just a shade under 38, so that might be some of the resistance it's kind of hitting right now. Some guy on CNBC was very bullish on this, though, and he has been. Now, obviously, having been bullish on this has been very good, because it's gone from 10 to 44 in the last 52 weeks. So,
yeah.
But he still thinks it's got something to go. He thinks even, there are other companies that could be interested in this company. So,
yeah, it's a sound. They do like advanced sound stuff, right? I mean, in your home. And I mean, whenever I see sideways action like this, I and you could draw a line up here too. Yes, this broke out here, but it didn't really last too long. I always take my I'm an old school kind of guy, and I take my protractor and I put the pin here and the pencil here, and then I rotate it up, and there's some distance here to the upside if this thing breaks higher. This stock doesn't excite me, because I don't see the momentum here the way a usual market that's about to rocket happens. I could change, but right now I don't see it.
Well, this next one, Hilton, obviously is benefiting from the reopening, and it certainly has had a big run from the big drop last year. And room rates are supposedly high. So I don't know, is there a lot more to come on this one, or has this discounted quite a bit?
Well, you see,
what is happening?
You see here, it's flattening out. You have the runs, the flat period, a run, another flat period, a run, and here's a flat period. I mean, I do think that whatever's going to happen can happen right around now, as we're it seems to be cyclically, if you want to kind of measure the length of these, looks like we're about in that area where we would see some sort of a breakout or breakdown. We're not getting much help here, as we're going between, we're not moving firmly between this. The momentum is not going to between the green lines, or firmly in the down market between the red lines. We're getting no help. So, this is really a kind of a chart where the market needs to tell you where it's going. Certainly the news is very positive right now. But, I got the feeling that it's just too much positive talk right now. I saw the, AMC and the movie stocks going nuts today. I don't know. I still think there's hesitation out there, and I think it's going to be a bit of a choppy market. But, I'd wait till this market breaks up or down.
Yeah, this is another example of the volume drying up. The 50-day volume is about 1.8 million a day, and the 200-day volume is about 2.5 million a day. And today it did 1.4 and change. So this volume drying up, do you have any input on that? Because, I mean, if you're at high prices and the volume dries up, is that telling you that not everybody's in and there's another big leg ahead of you? Or does it tell you that everyone who wanted to get in is in, and you're having a hard time attracting new buyers at high prices, and that could be a problem?
I think it could be the latter. And certainly this indecision, this meandering of momentum really shows that, this really, market's not sure where it wants to go. I think it's pondering all of the things I've just mentioned about whether this is, whether we'll see the this market continue to be another phase. I mean, you could have talked about, the variance, but the reopening in some states and the variance in other countries and India and so on that created this mess. But it's still a mess. And I mean, from a standpoint of whether you want to buy or sell, I mean, if you were looking at a 15-point range between the top of this range and the bottom, but you got to let the market tell you what to do here.
The next one up is agriculture, something that I've been very much on since last year. So this thing has been something that is no surprise to me. And it's back up again after having a correction down to 18. It's right back up in your face at 1889 today. Grains are up in everyone's face as well. And what do you think here?
I wish Jake was here with us because this market still looks good. We're talking about Jake Bernstein, who's a cyclical seasonal guy. But look at this momentum. Here's a typical example of when we're in a bullish market like this. You'll see the momentum go from this 80 to 90 band and come down and in a corrective action like this, but get supported right here in the 40 to 50 band. Then come back up right here where it'll start to peak out. And this, you see a slight divergence here, which gave you a signal that this may not last long. You had a chance to get short here. Didn't give you much because this is a bullish market, but the momentum eased right into that support area again. And now we're coming out of it. I think this market moves higher.
Yeah. Another couple of these things. One is for sugar is CANE, and one for coffee is Joe. And then you've got a full breakfast ahead of you and you see what happens. All right, let's keep going here. Salesforce had a big, good report. It jumped up to 240 area. How's it doing? Well, didn't like 240, I guess. Yeah, it had a good earnings report, but a lot of it was discounted a little bit. Ran up to the 238, 240, and now it looks like it's got a little bit of a space needle up there, right?
Yeah, and no trader likes to see this, from a long standpoint. I will say that the fact that it filled in pretty quickly, although, from my standpoint, it still has to fill this gap. I mean, I'm a kind of an old school trader. I don't like to see this kind of air. And I think that, here we are playing around in the bear resistance band here. We're in it again here. I don't like the long side of this, and I think the market kind of showed you. And there's some technical reasons here, of course, with this high and a trend line that you can draw here. Let's take a little bit further back and look at this. I mean, we're in a downward trend here, and you can see how we've played between the red bands much more than. There's nothing between the last time we played was when it was in more of a bullish state, which was right here. But ever since then, once we broke here, now we're playing in the red bands, and that doesn't, especially the last couple of days. So
and this company doesn't pay a dividend, so the only way you make money on it is the price goes up, and if it doesn't get above 250, there's not a whole lot of juice in it. So if you're looking to make money on something, sometimes it's better to get on a train when it's going rather than when it's hesitating or churning. And above 250, I think that would be a different ball game, wouldn't it?
Yeah, I think you throw mama off the train on this.
Yeah. But like I say, it gets above 250 and they start announcing more sales and this and that, and their earnings keep popping. It obviously is a great company. But it is a company you make money on when the price goes up because it doesn't have any other form of,
Is there any opinion on, the fact that people work from home and the need or lack of need of Salesforce in that kind of an environment? People maybe not getting back to the office as much as is that a factor in Salesforce?
I'm not 100%. What I got out of what an analyst was saying is that, they look like they're doing pretty good. And, this particular sector is having a hard time. Whatever Salesforce's sector is having a hard time. But it does look like things will be doing pretty fine. But they thought it was a choppy environment. And obviously going up to 40 something and then back into the 30s is evidence that it's still a choppy environment. That's why I was thinking above 250, maybe chop is done, huh?
Yeah, I think so. I think 250 is the number, somewhere in here, 250,
Yeah.
251. You need to make, I think 250, I think you got to run on the button with the closing high. I'm more of a closing high guy. But yes, I mean, but even then, I'd like to see where this momentum is going, and I'd like to see a little bit better action in the price when the momentum seems to be on the high side. Okay.
Well, Ford is a popular one because they're going to the electric cars, and everybody is gung ho on that. And that popped up pretty good here to $15, and then it went back down a little bit. Now it's still 1481. The P ratio is at 14, I see. So not that expensive basis that. And 88 million shares. Obviously, a few people are interested in it. So are we going up to 17, which is the big number people are talking about, or what do you think?
I think yes. Yeah, this is one of my favorite kinds of charts. And Ford, it's just been so, with all these great names out there, and trucks, they're known for the trucks, and trucks is that's a hot item, and it's just getting hotter. Again, I like where the momentum is hanging out. I like the fact that we've supported here with this downward accumulation. We supported here. We're coming up. We're still not overbought in any kind of sense from a momentum standpoint. And I think that, I always like these kinds of channels. Again, I'm taking my protractor, I'm putting the pin here, I'm seeing how far it goes. When it acts nicely here, this is an accumulation. If you put your pin here and your pencil here, we turned right at probably this length looks about the same. And then you measure here, put your pin here. I think 17 is an excellent target for this. And look, this gap is here, where it's not like that other chart where we had a shooting star. It gave you some resistance, but looks like the next couple of days could be very good for this stock. For all the reasons that you mentioned. But I love this chart.
All right, let's hit TLT, because that's really at a turning point in my view. We went up to this 141 area, which I have these long-term graphs, and the moving averages that I was looking at come in right around 141, which is kind of the mean. So we went to 180. That was way above the mean. We came back to the mean. We went under it a little bit. Now we're trying to get through the mean at 141. And right now it's failing. And there's some pretty big shooters. This guy, Michael Burry, I guess, who used to do The Big Short.
Mm-hmm.
And he is pretty negative on it. But I'm still from the belief that it's kind of in this range of like 135, 141. And whichever way it breaks out of that range, it'll give you a better idea of who's right, huh?
Yeah, this is, of course, look, we're looking at here. We're looking at the treasury, the 20-year treasuries, and I think we're going nowhere. But
Mm-hmm.
I mean, from we're playing in the low end of momentum from the standpoint where we're seeing if and we don't really have the time to go exactly, but you can see where when we reach the bottom, we come back up. Even when you have another fall, we get supported here, and here we seem to be playing between even though it's messy. See, it's kind of a mess, and but I don't see much advance to the upside here. You may have that one day where it tries to break, and everybody thinks somehow inflation is not a problem or won't be a problem, but I see more of the same.
This lady from Fidelity was saying that she's comparing what was going on now to the post-World War II timeframe, 1946, 1947. And she was saying that in that time, just like now, inflation came out big, and was even double-digit back then. And the Fed did absolutely nothing. And they let it run hot, which is, I think, the playbook they're running with. They must obviously believe, because of the debt out there and all the what do you call it, technology, automation, that inflation just cannot stick.
Mm-hmm.
And this supply, obviously you shut down all your supply chains and then you let everybody out of the cage, you're going to have some bottlenecks of supply and demand.
Yeah.
But what happens after that? Obviously they increase the supply, right? And maybe the demand wanes off a little bit because they already bought everything. And that could be the dynamic that makes inflation not come back, or maybe comes back, but like in 46 and 47, it lasts for a shorter period of time. But that doesn't mean, you couldn't get a big inflationary deal this year and make a lot of money by buying inflation hedges this year. But the Fed isn't, short-term trading. You know what I mean?
Yeah, no, I think that's a good analysis. I mean, this is a long accumulation, which again, from my taking my protractor, this could go one way or the other, but I just don't see much happening here.
No, yeah, that's what she was saying. She was saying rates are not going up or down very much.
Yeah.
It's going to be meandering as the Fed just lets like a 3-year-old run around the yard until he gets tired.
Well, also, with all this borrowing, the Fed can't, you can't borrow at high rates.
No.
And there's so much debt out there,
Yeah.
and so much debt to come in the near future with
Yeah.
the bills they're trying to pass. I just don't see much movement here.
And then, of course, people wonder who's going to buy all these bonds. Well, all you need to do is bring the stock market down 10 or 15% on a correction. You'll have plenty of money to go into bonds.
Right.
So anyway, we'll have to see what happens. But you're not seeing this tremendously bullish or bearish, more range bound right now, huh?
That is correct.
Yeah,
That's
not
correct.
much going on there.
The chart is telling me. Here's the gold miners.
Yeah, let's go into this because this is where everybody is talking. And according to Jake, if you recall, later in the year, it's supposed to be something to ring the bell about, right?
Yeah, I haven't been following the mining stocks. I mean, Jake would slap me for this, but I follow the gold and more of a silver guy.
Yeah.
And of course, Jake is more of a platinum guy than he even is a gold guy.
Yep.
I don't want to put words in his mouth, but that seems to be where he ends his conversations about where he expects to move. And they've had some pops, but I think that, but this is not a friendly chart. And again, when we look at this momentum area, where although it's messy, we're now coming into an area where if we do get a rally, it could very well stop fairly quickly.
Well, this is a 2 times bearish. So this is for somebody who thinks the mining shares are going down, right?
Right.
Yeah. Well, that obviously hadn't been working very good. They got away with it for a little while, but
Yeah, and here's one of those formations. Here's a similar formation where we're just sparking. We've seen that all the sparks seem to be on the downside. It's this is a listen. We're at a point right now in this chart where we have some support.
Yeah.
And that said, when you see this is just as responsible a place to draw a band as anywhere.
Mm-hmm.
And what I like about this is that when it does break, you could take a position here, and usually if this breaks higher, you would be putting your stops below the band, and even a whipsaw couldn't hurt you that much. We're talking less than $1 here. So this could be an interesting place to take a long-term position, depending on if it breaks higher.
Or maybe more, Norm, could it be a trade? Meaning we hit 1404 on this thing. It's at 1444, and maybe gold is going to have a hard time at 1950, and maybe gold's going to have a correction back towards 1850 or 1800.
Mm-hmm.
And if that were to occur, then dust would give you a trade. But I wouldn't go to bed with this, because the long-term trends on the gold and the long-term trend on this thing is not conducive to this thing working out for a long period of time.
Well, the Elliott people are looking for some corrective action in the gold market before the move higher.
Yeah.
So that would portend some sort of rally to even 18 and 19 here before.
There very well could be a trade here.
Yeah.
Yeah, but it'll be dependent on getting the break in gold. If gold going up through 1950, this will be a rough racket, right?
Right.
CRSP was going nuts a lot of time this year, but didn't it cool off? I'm not sure. CRSP.
Yeah, I mean, here it is. The bloom seems to be off the rose here. The attention, here was again that signal where you had a doji, a total indecision, followed by a movement through the 8th that led to something very amazing. Here you had something similar that was short. We had that same signal here, but here's a negative version of that signal. that's leading here. I mean, this, again, we're playing between the reds and where we were playing between the greens. As we were playing between the greens, we had this big up move. Now we're playing between the reds. This looks like more downside to me as this rally is approaching the resistance area for where a bear market rallies. And this is a sick market.
No, but it's a good example of reversion to the mean because it was trading at 220 in January of this year.
Yeah.
And the moving averages, the 50 days now at 115 and the 200 days at 122. And if you told people at 220, it's going back to the mean, they think you have a alcohol or drug problem. And right now, the only problem you have is you have your money and the other guy doesn't, So when I'm looking at the S&P and I have a 3-year moving average coming in at 3,100 and a 2-year at the 3,300 and the 1 year in the 3,600s, and we're up at 4,200, and you're trying to explain to people there could be a reversion back towards the mean at some point this year. It sounds like crazy talk, but this is another example of crazy talk sounds crazy until it occurs,
Well, when you have, therapeutics are very big. There's a stock that I've every time we get together, I always point to Organovo, ONVO, and we'll take a quick look at that. But it had almost a third. It was up 30% in one day. They're a biotech 3D printing stock, so this kind of stock always it can surprise.
All right, next one is Tesla. And one thing I can say about Tesla is I had to Google what diamond hands meant. So I learned a little bit about that. Apparently it's hands that hold on to something all the way to the bitter end. And that's why he was saying his Bitcoin position, he has diamond hands. Little sidebar, right? Little sidebar.
I like it.
Yeah. And so anyway, this thing here, it ran all the way up to 900 and then it went back into the 500s and now it's in the 600s. And what do you think is happening here?
I think it's a sad looking. I mean, you can talk about support here, but again, from a momentum standpoint, pretty clear to me where we're in a less interesting place than we were here. And there's a lot of competition coming in to the electric car business, even though they're the leader. I think this is a time where we're going to see a lot of basing in Tesla, where their next move, may take them back to the top. Look, they're still a leader. Everybody watches what Tesla's doing. As far as stock price is concerned, we're down 35% from these highs, and I'm not seeing a big reason to get heavy here on the long side. I think there's still some corrective action left. You can draw a simple trend line here, and you may see it approach to 700, but I think that would only bring us into this 55 to 65 area in momentum, which would make me a seller on the next signal. Here's a short signal right here, another one here that we were talking about. And so I don't. Listen, if you're in it for the long term, I don't think there's. Maybe there's another $100, $150 down on the downside, but I think there's a lot of sideways actions coming up, the future of Tesla.
The moving averages are coming in at 647 and 597. So again, when it's at 900 and people say it might revert back to the mean, this is another example where it actually did that. So, these stocks that get way away from their moving averages, they're ticking time bombs at some point, in my view. And,
you can draw that line right through here and see, half the action is above and half the action is below. So, we're right at that place in the 500, 550 where we could really settle in for a while.
Yeah, we could churn around in between the 2 points.
Yeah.
CELH, I'm not familiar, I don't think. Let me see if I am. Yeah, Celsius Holdings.
Let's take the temperature then of this.
I guess.
Whatever the hell that is.
Mm-hmm.
This is one that I don't have much of an opinion on, except for I wouldn't be a buyer because we're at the top of what seems to be a resistant area here. That there's no question we've attempted. We're in the 5th attempt to break out here, and although and our bodies are getting smaller and smaller, which means there's less decision here, less opinion throughout the day. I mean, these are 5 bodies that moved about the same as this previous body before, matching these highs. Every time we've got big tails. I'd be looking for a place, if I was a trader, to short this, to continue this upward. But there are better stocks to be dealing with.
Yeah, they're located right in your neighborhood over there at Boca Raton.
Oh, really? I should know.
Yeah,
I should know who
they
they
are
are.
a beverage company. Oh yeah, that's right. They're the beverage company, and they've got, I think, different flavored beverages and things like that. And
Well,
beverage companies have been doing very well, so I guess that's one of the reasons this thing's done
yeah,
pretty good too.
I think the bubbles are about to escape on this, but we'll see. I don't, we have held. This is a mess. We've held the red. We've held. There's just no. We have no extremes in the. No, even though the market is, the price is moving higher and lower, there's nothing happening. We're spinning as far as the momentum is concerned. So I just don't see, again, staying in the range. A lot of people, this may be one to do, covered calls if you get down here, or, this kind of thing. So, but there are better, more steady stocks to do that kind of thing with.
Well, this next one went through the roof big time here, and again, this one has a 200-day moving average at 8, and the stock is trading at 24 almost. So certainly, it has had a big move. And when you see something like this, Norm, like Jake was saying, if you want to get on this train, is it sometimes good to use an 8 or a 10-day moving average and just let the market go as far as it'll go, and let the market take you out rather than trying to figure out in or out, in or out?
Well, you're looking at an 8 right now. This is an exponential moving average, but even the 8 normal without the exponential would look pretty much the same. Yeah, look at what's happening in this chart. It's a little different than some of the negativity that we've seen in some of the charts that seem to be more toppy. But see, we're moving between these green lines all the way up. Just even on the corrective action in the momentum results in a sideways to higher action. This is the traits of a very, very strong market. And then when you do get the market starting to move higher, it goes with a bang. I think this market's not done. You've traded long enough, of course, Jim, to see, and as an options trader, you probably have more of a sense of this than I do. This is the kind of market where all of this stuff could look like this. This could look like this 6 months from now. Mm-hmm. Where this thing really takes off to 70, 80, 100, and so on. I don't know what Technoglass, but this is why I like to do this show, because I'm going to take a closer look at this stock.
Yeah, they're in Colombia, their headquarters, and they deal in insulating glass, laminated glass, monolithic glass. I don't know if it has anything to do with the glass that goes over the iPhone or something. I'm not sure about all that, but whatever they've got, people are interested in right now, that's for sure. But like you say, if you have some kind of a short-term moving average, you don't have to tell the market when it wants to correct. Yeah. It'll hit you out that way, and then it lets you ride the horse without riding it all the way back into the ground, hopefully, right?
Right. I mean, I'm not sure I would be a buyer here for people who want to jump on things, because we are getting close to it. But there should be some sideways movement like this, or some short corrective action. Maybe you can get this at 22, at 21, 20. But I wouldn't be looking, to try to clip this at 15. I don't think it's going to happen. This thing is really built for speed. Again, there's a market I really like to take a light position on the next correction, looking for all of this to look like this, because this right here, this looked like this when we were back here. I mean, it can happen to markets. So love that chart. Thank you, whoever showed me that.
This NVIDIA one was one that when I was looking at it, I thought if it's going to do a repeat of Apple, where everybody bids it up because they're splitting, even though it doesn't make any difference, you could catch a pretty good run. And that was right around 575. And so a simple, 10 moving average on a on a 6-month chart, got you in about 575, and right now it's the average is at 610. So that's a lot of distance between 650 and 610.
Yeah.
But it was a way to try to ride the thing if it was going to go, because they're splitting supposedly July 19, 20, and they got to approve it on June 3rd, which I guess June 3rd is tomorrow, isn't it? Or Wednesday, Thursday. So anyway, that's the story on NVIDIA, is obviously that they make a lot of money, and that they are splitting, and the splitting thing 4 for 1 is getting people thinking they're going to get $4 for $1 when all they're getting is 5 singles for a 5,
Yeah, but I mean, you're right. I do that to young kids that, the kids that can't make change at the counter anymore. So I always say, can you give me 2 10s for a 5? And I hand them a 5, and they don't quite understand what I'm, and some of them are pulling it out of the register. But unless they could put in, they don't know the change to give you. When it's 10:01 and I give them 20 with a penny, they don't know what's happening. But this right here, this has been a really big winner for most people for their long-term holdings. I mean, it's messy here, yes. The great thing about this mess is it didn't give you too much pain. Let me look at this and see this action here where you have the indecision with the movement through this through the moving average. This led to a nice movement here. Here you have it again, indecision followed by a move through, leading to this. And I just this in the next correction, and I think we're going to get one.
This could participate.
I think I still think it's a great long-term hold. And if you don't have this in your portfolio, but getting back to the splits, I mean, it does make it more affordable for people who don't look at $600 stocks. They'll look at and there was this time where people didn't look at $150 stocks. Yeah. But they do now with the advent of numbers like.
Well, no, but here's the difference: is you can buy fractional shares now, so it makes the split really stupid.
That's true.
I mean, you don't need them to split to get. You can buy, a half a share. They got fractional shares now. At any rate, it is what it is. That maybe people are finding out that 5 singles back on a $5 bill doesn't mean difference as far as the valuation of the company. And 2 is that if I want fractional shares, I'll buy them fractionally.
Yeah, I think I'd be looking to buy somewhere between 600 and 620 if I didn't have in my portfolio. I think that's an area that you may get some action, but this may leave you at the gate here. But when it corrects, this right here should be support on the next pullback. So you'll have to watch out. Let's see what else we got here.
Well, the next one you got is the hack for the hacks. We just had another hack in the meat business. And so bottom line is that some people are looking at these players like this because their demand should go up when these hacks continue, but that's not really the price action we're seeing too much of, right?
Well, it's not, but this is a stock that I would be a buyer on. And even the distance from here to here is only it's $3, and that's a lot of movement, and there's a lot of commitment on both sides right here. I like the fact that we're riding on the bullish support area where if the market goes down, it usually holds this momentum area. You can see what happened here where it came up. This was the peak, and where we've come now down and accumulated all in this area. And if this is an accumulation, this could be a $40 stock. I like this chart.
If there was a shock happening in this stock, it looks like it'd be a shock to the upside.
Yeah, I think so too. And I think that the lack of attention over the last 5, 6, 8 years that we've been paying to cybersecurity on a global basis, I think there's more of this stuff to come, and I think this is a nice stock to consider.
This fits into the theme of renewables and cyber security and maybe some cloud activity. For a portfolio that wants to put X amount of dollars into those type of things, right?
Mm-hmm. Yeah, I like I like the current action. That's a mess before that, but yeah, and I think the news is supportive of what's going on.
All right, SPCE, they went into space, everybody got excited, and then they came back to Earth, and then they just went into space, and now they're getting unexcited again. But what do you think here?
Yeah, I'm not positive. I'm negative on this for the time being. Again, I don't like this action, this shooting star where we had no body, and but we are maintaining the 8-bar moving average. We have broken, you know, this support here really showed me that there was a rally due. We had our rally. I don't know if there's even enough momentum to get overbought. This is you talk about the mean point, those middle points. I mean, here's an area right here where, and you can see right here, we're going to have a tough time going through. I think this is a sideways market at best. You know, again, another market for the future. I mean, for somebody that's looking out, you know, to you know, 10 years or whatever, to dabble in the next correction here around the 20 area, I think it's a good long-term play. I like Virgin Galactic. I mean, I like the idea of the company. I like their forward thinking. I like space. I mean, they're mining asteroids. People don't even know that they're landing on asteroids and digging it. You know, it's easier to land on an asteroid than it is on the moon, because there's no gravity. All you gotta do
I wonder if it feels like volcanic rock, where you're like, if you're in Maui and you go to the Haleakala crater, you get the rock from the volcano. I wonder if it's that feeling, or I wonder what the stuff feels like.
You're such an emotional guy, Gene. I never thought of that.
All right, here, let's wrap it up. Western
though.
Digital, obviously the semiconductors went down, then they went back up. They're starting to get on their bike. This thing really is trying to figure out if it wants to go to 80 or what. What do you think it wants to do?
I think it wants to go to 80.
Yeah.
Look, this is, you know, since the drop. Now, of course, you know, we're matching something back here that that seems to be, there's some action, some gyration, but I like the fact that we're trending higher, and I like the fact that we're basing here in this in what could wind up to be a nice momentum base that could move us higher. Although I don't like the recent action from a momentum standpoint, but I think so far this area is winning out. Where although again, you know, maybe I'm making this up in my mind, because really this is a sideways movement, but I do like the fact that we're challenging the high and we're getting a lot of action. I'm friendly on this, and maybe it's just I don't like to trade feelings. I wouldn't be in this or have a position in this quite yet, but I think that if we had corrective action down into the 67, 68 area, and we maintain this momentum between 40 and 50, I think I'd be looking for a buy signal. What's your thinking on Western Digital?
Well, no, like I say, it looks like it's trying to take off. The SMH, which is the ETF for the semis, is trying to take off. So I would think that if you see 252 to 255 on the SMH, you're going to see this thing taking a run at 80.
Yeah, this is one where I agree, but I also agree that you got to wait for a signal, as you know.
Yeah.
So.
Well, let's turn to these commodities. We got a few minutes here. You know, we talk about demand, supply. You know, this is not like we have a short supply of neckties and it doesn't matter. The stuff that we talk about here, people are eating, like the grains. They're using in their car, like the oil. They're trying to build a house with the lumber, and they're trying to get wiring with the copper. So when this stuff gets tight and you get this many people coming out of the woodshed looking for this stuff, you can really, like, I've seen corn, which I've never seen go like this. It was up 40 the other day. Today it's up 32.
Yeah.
Wheat is up 30 today. So, you know, there's obviously some legitimate shortages out there, and people are coming out there, want to buy stuff. And so what of these commodities, is there any particular sectors that you're keen on? Or
well, I think we're ready for another move higher in all of these grains, believe it or not. I mean, again, this is that signal that I talked about, a little indecision followed by movement down. We had our depression. Now we have indecision. This is what they used to call this a hanging man, I guess. moving higher. This is a strong market. And look, we're basing right at the right place here. I think corn is going higher. I think wheat, I think they're all going higher. And I think our friend Jake was right on here. He talked about you know, we used to say beans in the teens. This could hit $20.
No,
I mean,
a lot of people are talking 20. Yeah.
You know, I just think there is one play that I look for during this, and it's a more conservative play. Here's here's that similar formation on the upside, and that is buying the wheat and selling the corn against it.
The spread.
The spread. There's a good dollar in there over the next probably year. I mean, it doesn't sound like much, but that's $5,000.
So you're thinking that the wheat will hold its water much more than the corn when circumstances change?
Yeah, I think just from corn is classic.
Inordinately priced. Yeah.
It's usually a dollar or so less than wheat, if not more.
Right.
And when you have it at an equal price, I mean, I think they hit an equal price the other day. I mean, we've got the wheat at
about flat now, almost flat now. Yeah.
Yeah, we've got the corn at 87 and 91. This is the time where you put those long term on. You got to be a little bit careful because when you roll, things can happen in the season. But I think you got to do a little study before you do that. That's where people get hurt with the long term spreads.
Right.
But I think if you buy out, if you look at some of the further out months, that is probably the play here. Either that or a light spec position. There are small contracts in this also. I think there's a lot going on here. I've been watching the copper. You know, the copper with all the new construction and things that they're talking about with the new
infrastructure.
Infrastructure, and you can see. You know, we had my trigger here that did well, a trigger that, but now this is well, actually, we may have made a little money on a scalp, but again, don't go buying or selling based on this. It's part of a system that I use, which got to know the whole system. But this right here, where we're basing again here, like this market, I think we could go higher again. It's now we're gonna see some action in the top here, but corn is interesting. Silver, you know, I'm seeing a lot of tails here, which don't excite me against recent highs. I think the Elliott people could be right that you can see we're kind of basing here on the top. Even though the market's going higher, we haven't been able to break out of that 55 to 65 range. And therefore, I think we're going to see that. I think you're going to have a chance to get long in the silver. So, you know, hold your water here.
But get ready to accumulate.
I think so. Yeah, I think so. I think.
Now, what about this Japanese yen that you follow quite a bit? I just was hearing the news out of there in that their economy, the GDP, might go back into a recession if at the end of this quarter you got another negative number. And their exports are doing fine, but whatever's going on internally over there, what is that doing to the yen? And what do you think?
You see what you see. You see exactly what's doing to the yen. I mean, you have a weaker dollar, which usually, although the Japanese yen follows the dollar more than, say, the euro, which can play the opposite game to the dollar. But generally, in a very weak dollar, you'll see strength in the yen, and we're just not seeing it. I mean, this is something. And again, we're playing in this
negative schoolyard
momentum. Schoolyard. Although. You know, we seem to be basing here. I think we're going to see this is not the currency to be in. You know, those, and I know that you know that I've been a big trader of the yen, but really it's the euro now that has the action. Yeah. And you can see what happens with a weaker dollar. This market, you know, I mean, it's been a great trade, great market to trade, although it's ready for a correction too. As the dollar may be ready for a rally. But I want to show you before, I know we don't have much time, but I do
let's talk about the disciplined trader and how it can help people control their emotions and maybe give them some discipline and all that kind of good stuff.
Well, I can tell you about that and sell you something, or I can just show you this. I'm going to show you Organova real quick. This is a stock I always talk about for the last 3 years about. This is the This is 3D bioprinting, where their wish is to print out bioidentical kidneys eventually. They're doing skin now for beauty companies. But this right here, this is that signal that I talked about, where, this could be a break. Keep your eye on this, because this is a market that you can see that it's can be sensitive to the upside. But in a 3D printing, it was the darling 10 years ago, and now everybody hates it. But bio anything is in. You combine the two, and you're doing it here. I think there could be some really big momentum. So keep your eye on this. As far as what I do, I help with the mental and emotional. If you go to the disciplinedtrader.com, you'll see what I do. There you'll see some of the simple trading plan. You'll see the Disciplined Trader Mastery Program. Listen, journaling. I'm emphasizing that, but that's not what we do. Is help you with the subconscious mind. We've developed things, subconscious trainings and meditations for traders, to help you to stop moving your stops all around when you get a little scared and you start making up stories that the traders on the floor, or wherever, there is no floor pretty much anymore, but they're all after you and they know you personally, just to take you out and then move it in your direction. So let's move that stop down. When you start making stories up, you have to challenge what you're thinking about. And that's what these meditations do. They keep you on track to follow your trading plan. We also use something called EFT, Emotional Freedom Technique, which is the go-to therapy for the soldiers who come back from the war. What is that called?
Post-traumatic stress
disorder. And you heard a lot about it. It's EFT, emotional free, and it's called tapping, where you're tapping meridian points while saying certain things at the same time. We utilize that. This all sounds crazy to some people, but I have to tell you that the combination of Eastern and Western, and the fact that it's been proven with the soldiers, has really brought that particular therapy to the foreground. And we've made specific sessions for traders so that they get out. Most traders have a pretty darn good trading plan. They just can't get out of their own way. And that's what we help you do. So visit the disciplinedtrader.com, see what we're doing, opt in and get on one of our lists. And I always send you goodies like the stuff for him if you want it. But whatever, I appreciate the time, always the time I spend with you. You got a great sense of humor, and I certainly appreciate that, Jim.
Thanks, Norm. All right, everybody, thank you very much, Norm, for being here today. Of course, we're going to do this many times more, because this is always a good one. And just for everyone else, this is optionprofessor.com. We have a weekly newsletter that goes out, and also a weekly update that we provide. So if you go to optionprofessor.com/subscribe, you can pick that up. And we cover everything from the stock market, the bond market, so you get income ideas. You got international. We've already talked about emerging markets, Europe and Latin America. We got the gold, silver, and crypto we talk about. And then, of course, we've got the agricultural stuff. So we give you a lot of information to work with. And I've been doing this for decades, so I think I have a certain amount of product knowledge, which I share with you each and every week. optionprofessor.com/subscribe. Back to David, and we'll talk to you soon. And thanks again, Norm, for stopping by.
Thanks, Jim. And thank you, David.
All right, thanks guys. Lots of good info today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube or your favorite podcast app to get updates there on all the episodes from Timing Research. Also, you can just go to TimingResearch.com to get access to this show as soon as I can get it posted. Yeah, or any of the past shows are there as well. And I just want to thank my guests again for today, Norman Hallett of thedisciplinedtrader.com and the Option Professor of optionprofessor.com. Thanks, everyone.